So how are we going to forecast future prices? Now, the two most common approaches are fundamental analysis and technical analysis. These are actually the only two approaches, and that's what we use in stock trading or stock investing and in any other financial market. So what is the difference and which one should we use? Now, some people only like using fundamental analysis, like Warren Buffett, who looks at companies, but really looks at everything in the company, doesn't look at charts at all. And some other people only use technical analysis. Now, it depends if you're an investor or a trader and what is your style. Okay. So first of all, what is fundamental analysis? Fundamental analysis is basically looking at the coin that you're investing in. What's the project, the team, the roadmap? What is their future plans, growth, evaluation, the news on the company, regulation, taxes, anything that has to do with the fundamentals of the coin. And I could have replaced coin by company, right? How many employees do they have? What's the taxes? What's everything? How many products are they selling? All of that, that's fundamental. Now, technical analysis is basically the study of prices and volume. That's it. It's you looking at the chart, you looking at prices. So basically you're trying to predict the future price by looking at the historical price and volume, the quantity of transaction and the price of those transactions. That's it. So which one should we use, right? This is an investment course. So you would have to guess that it's fundamental analysis. Fundamental analysis, you want to look at the actual project, the actual coin. That's what's going to lead to price appreciation. How much it traded yesterday and its price yesterday is not too relevant about its future price. And the example I love to give when I'm comparing these is in real estate, right? If you are a real estate investor and you want to buy a house and you want to hold this house for 20 years, what are you going to look at? You're going to look at the foundation, isolation, if it keeps heat well during winter, the material that's used to build it, the neighborhood, if there's going to be a bridge or a school built in the next 10 years around the house, how much you can rent it at, all of that stuff, the fundamentals. You don't care if a house next door sold for not too much or for a lot yesterday, or how many houses sold in the neighborhood this week. You don't care about that. So you're looking at fundamentals. Now, if you were a flipper, you wanted to buy a house and flip it the next day, that's it. Then what are you looking at? Do you really look at the isolation and the material used? Not really, you don't care about that. The only thing you care about is how many houses have been selling in the surrounding, in the neighborhood, and at what price. Because you plan on fixing it up and flipping it tomorrow or in a week. So you want to get in and out quickly. So what you're doing is you're actually looking at technical analysis because you're short-term biased. And the best predictor in the short term is the prices that it was at just recently. Now, the best predictor for long term is actual fundamental value. So as investors in cryptocurrencies, if you are an investor, you don't get too puzzled by what is the volume now and what is the price and all of that, because you're looking at a longer term view. Now, if your plan was to buy something and sell it in 1 hour, then you might look at something and say, oh, well, it has a lot of volume, it's trading a lot, and the price keeps going up. I want to buy some because I can sell it higher in 1 hour or in 1 day. That's totally acceptable. But if you're a long-term investor and you want to hold something for 10 years, you don't go about it that way. Because you know what? There's a lot of shitty coins. Like we said, 70% of coins are scams. There's a lot of shitty coins that have no project, no team, no growth. They're not following their roadmap, nothing. And they have a lot of volume because some people are pumping them and dumping them later. So they look good, but if you're a fundamental investor, if you're a long-term investor and you're looking at technicals like, oh, there's a lot of volume and the price is going up and you buy it, well, guess what? In 10 years, that coin is not going to be there. It's going to zero. But if you were a short-term trader and you want to buy something and sell it in an hour, then you might buy that because you don't care about its fundamentals. You know it's shitty. You don't plan on holding it for more than a day. You just want it to get in and get out. So you do look at volume, you do look at price, and you're in and out, and you made your money, and that's it. But again, it's two different approaches. So for us as investors, we're going to be looking at fundamental analysis. We're going to be looking more at that, but that doesn't mean we're not going to look at technical analysis at all. We are going to look at technical analysis. Why? Because we are still going to look at charts. And we are still going to use some things in technical analysis to help us get better prices when we're getting into a position and getting out of a position. So it's not our strategy. It's not what tells us to buy or sell, but it's after we know we want to buy or sell something. It's something that will help us to get a better price when we buy and sell at a better price when we exit. So without further ado, let's get on to the next lecture.